Hello, this is Tim King. I've been a real estate investor for many years, and through that time, people have told me, hey, I'd like to invest in real estate, or I wish I could do that, or can I get in a deal with you? Our company, Quiet Capital, is in the process of putting together a group of investors to invest in some of our next projects. We may not be a fit for you, and you may not be a fit for us, but I decided to put this short video together to explain what we're doing in general terms and see if there's a mutual interest. If you're getting this video, you probably know a little bit about my background, but I started investing in real estate 16 years ago. Started buying single-family homes. Over the years, I've probably bought over 200 homes and remodeled and rent them out. And I still own most of those properties. My son Tyler joined me when he turned 18. We set a company up and started buying houses, and he learned how to remodel them, find tenants, screen tenants, lease them out. And then when he graduated college, he joined me full-time about 3 years ago, and since then our investments have exploded. I secured my retirement last year at age 47 through real estate. Retirement is not an age to me or stopping working, it's just knowing that I can if I want to, and that's a good feeling. So what does our company do? It invests in real estate, very simply. We partner with other investors, and then once we buy a project, we manage that asset. We don't property manage, we manage the managers. And one of our strategies to make the most profit is we invest in emerging markets, and I'll get into that in just a minute. So what is private investing? It's where several investors come together and pool their money and buy a property. And when we buy that property, the investments are secured in three ways: through the equity in that property, the profits that it generates, and through insurance. So why invest with Quiet Capital? Well, our motto is we don't buy property unless we are positive we can create a high cash-on-cash return, usually 8 or 9% for the investor. It's a quarterly income stream for our investors, so every quarter they receive a check. Investing in real estate is a great way to diversify from stocks and protect from the losses in those stocks. I'm not a big fan of the stock market. I actually pulled all my money out of the stock market last year. Glad I did after watching it this year go down. But I've never been a big fan of the stock market. I'm not telling you to pull all your money out, but for me, I like to have a little more control over what happens with their investments. Another great way to invest in real estate is through your IRA or 401k. We will be showing some of the investors, if they have monies in IRAs that they would like to invest in real estate, how easy it is to self-direct it into a real estate investment. So the investments are secured three ways that I just went over, and it's hands-off management. Nobody's a landlord. Nobody's receiving calls from tenants with runny toilets at night. It's professionally property, or a professional management company handles all the day-to-day property management. It's really hands-off. There's monthly communication to all our investors, and we always take a conservative approach. We look at many deals and turn away most. There are only a few that will meet our criteria, but when they do, we're pretty sure it's going to create a nice return for everybody. So why do we invest in multifamily or apartment complexes? Well, when I started buying single-family homes, it's a lot of work. You find a house that may be in need of repair, you fix it up, you find a tenant, it takes a long time, and you make a few $100s a month. Well, I got smart a few years ago and realized, why do this one at a time when you can buy 100 at a time and make more money? It's more efficient. The opportunities are more. Think of all the wealthy people you know. Most of these people are usually involved in some sort of real estate in one way or another. There's three money-making components to real estate. The first one is simple: cash-on-cash returns. This is basically the profits each quarter that the property generates. For example, you put $100,000 in a CD at a bank. Right now they're paying less than 1%. They pay you back less than $1,000 a year. In a normal investment that we look for, we would pay back $8,000 or $9,000 a year. That's a good return in any market. Secondly, I love this one, it's principal pay down. So when you buy your house, you pay your mortgage each month out of your pocket. When you own an investment property, Your tenants are paying down your mortgage, basically paying off your debts. They also pay for the maintenance, they pay for the property manager, they pay your mortgage, your insurance, your property taxes, and more importantly, they pay your profits. And then the third one, which is my favorite one, is forced appreciation. With apartments, it's not like buying houses where you have a market value based on what your neighbor sold for. Apartments, it's all by the numbers. If you can increase the profits, you've made your property worth more money. I'll show you an example in just a minute of one property that I did that recently too. But you look for properties that are a value add situation where maybe they're mismanaged, the expenses are too high, or the rents are too low, or the property manager just doesn't care. We find many of those, and those are money-making opportunities. Here's an example of one that I bought a little over a year ago in Huntsville, Pine Tree Apartments. Now this property is a little smaller than what I normally look to buy, but it kind of fell in my lap, and the profits were so enticing that I couldn't resist. So I paid $3.4 million for 88 units in Huntsville. The investor cash-on-cash return is a little over 9%. I plan on holding this for 4 years. Through forced appreciation, mortgage paydown, and cash-on-cash, investor annualized return is 23% a year. Not too bad. So one of our strategies is investing in emerging markets throughout the Southeast. We own properties in Alabama, Tennessee, we're looking in Georgia, and looking at some in North Carolina currently. What is emerging markets? I live in the Nashville area, and over the last few years, the real estate market has really boomed. It's a great place to buy a house, great place to sell a house. It's hard to make money in apartments in Nashville because there's so much competition. So the cap rates are really low. So we look for emerging markets, maybe cities that are a few years behind Nashville that are on the uptick. When they do that, your property values escalate much higher. So emerging markets. Some of the things we look for in an emerging market are in front of you here. We look for a 2% increase in job creation, household formations increasing by 2% a year. College towns are usually pretty good, state capitals, big box retail. A lot of the properties that we have bought and looked for are around your major big box retailers like Lowe's, Home Depot, the newer stores. They do a lot of research on where to plant their stores before they invest millions of dollars. So we figure that's a pretty good strategy to kind of follow behind them. One big thing is strong city leadership. We research with the Chamber of Commerce, what's the city doing? Are they redeveloping the city? Have they created incentives for businesses to come in? What's going on with the leadership? Cities that are growing are good places to invest. Cities that are declining, you want to stay out. We look to invest around major interstates. We would like an airport with one major carrier, and the population at least 100,000. You want plenty of people to be able to rent your apartments. So why emerging markets? Well, it's a higher than average return. Initially, there's not as much competition. If you get in early, you have a better chance of a huge return. You can trade up into bigger properties faster, and that's another strategy that I'll pick up at a later time. But that's the way institutions invest. They go in early, create a good market, and make money. So protections. Over the 16 years I've been investing, I've invested in up markets, down markets, sideways markets, and what I've learned is people always need a place to live. Even if the housing market crashes, people still have to live somewhere. And sometimes the rental market is even better when there's not a good housing market because people can't buy houses and they have to rent. As an investor, you'll receive a deed to the property. You are an owner. You're on the deed. Or the LLC that you own is on the deed. And we'll get into more details later. I don't want to get too detailed with this short video. There'll be an insurance policy for a fire or tornado or anything that might happen. We also always buy title insurance, so the deed is always clear. There'll never be a cloudy title. Our properties are always professionally managed. You're not a landlord. I'm not a landlord. I don't want to do that. And then one of my favorites, non-recourse financing, which means the financing is secured by the property, not the investors or me. Non-recourse financing is how all the larger deals get done. The property itself secures the loan, not the investors. So why invest with us? To earn a high rate of return and a secured investment. And how do you get involved? Do you have cash lying around, extra cash? Are you looking to diversify your investments? Maybe you're in the stock market, it's up and down. You'd like to get into real estate somehow. And if you have retirement funds, we'll show you how to redirect those where you don't pay taxes moving it over, and you can invest in real estate as opposed to a mutual fund or single stock. So what's next? Our attorney is SEC attorney. There's a form that needs to be completed before we can talk to you about a specific deal, but it's an accredited form. It's a form that you would complete if you were opening an account at Charles Schwab. It's the same form. So there's a form attached to the email that you were sent that you can send back to me. I do have to have that completed before I can talk to you about any specific deals, but my phone number is shown above and there's my email address. So thanks for taking the time to read this video, and if you have any questions, give me a call. We'll talk about it. I'd like to meet and or at least talk over the phone and talk about some of the opportunities, and we'll see what the mutual interest is. Thanks again.